Hello and welcome to MasterChartsTrading.com market recap for the weekend in Friday, May 29th, 2015. This week's stocks are digesting some of the recent gains and all-time highs from last week, but there is a bit of a divergence in the S&P 500 that remains. Bonds are back from the dead and are up for the week. Gold may be ready to retest May or possibly even March lows. And oil started the week with a big drop, but rebounded by week's end. And also we'll look at a couple of oil-dependent countries, such as Russia and Brazil. Okay, so let's look at the S&P 500. So chart of the S&P 500 large cap index, you can see that third was no trading on Monday, so Thursday there was just a really big drop, and then next day the prices came right back. So this week basically it was kind of like a triangle consolidation. Generally speaking, triangle consolidations are bullish patterns within an uptrend. This is a very small pattern, so it's kind of difficult to say. But in any case, this is a 52-week high and all-time high, in fact. So definitely an uptrend and bullish bias remains. The only concern that I have with the market breadth is this on-balance volume indicator. You can see it's clearly trending lower while the prices are trending higher. So what does that mean? It's difficult to say because divergences are notorious for not working out. So we'll see where that leads. As far as the market breadth itself, the advanced decline line did hit an all-time high, and it confirmed an all-time high in the index itself. So that's a positive sign. There's no divergence there. And also, as far as the momentum of the breadth itself, we're still in the upswing and positive territory. And as I mentioned before, this is kind of like a slog higher, not really any kind of burst. Like for example, right here in February, we had a nice clean push higher and then consolidation and then decline. Here it's more like just kind of pushes higher and higher within sort of a channel. Nevertheless, this is a push higher, so we're going to be treating it as a bullish indication. Next, we'll look at bonds, TLT, 20 plus year Treasury bond fund. So I mentioned last week that we had two major sell-offs in bonds. Before that, bonds were performing really well. You can see as CTR was above 90, Stock Charts Technical Rank, which ranks all of the ETFs within the not leveraged and non-inverse universe against each other, and it was very strong. Then it came down really hard and then rebounded and came down again with a support break here. Now, since then, we had a rebound. We actually re-entered the market. I believe next chart I'll show the actual market timing. We re-entered the market right here on May 15th. Now, as far as, like I said before, there is now quite a bit of overhead resistance, and it is currently in the process, TLT is currently in the process of testing the overhead resistance of the 200-day moving average. You can see it tried to close above it, but so far has not done so. It closed below it right now as of today. So definitely overhead resistance in this area at the very least. Then next resistance area is from this support break and then the 50-day moving average. So for now, it's a pretty strong rebound, but there is overhead resistance in bonds. And like I said, market timing, we entered the market on May 15th in TLT. All right, let's look next at gold. So the past 2 weeks were really bad for gold, and like I said, here it looked first like a breakout and a close above the 200-day moving average right there, but that did not hold at all, and it collapsed in mid-May, kind of consolidated, and then collapsed again this week. And then it may be finding support right here. So at this point, I'm not sure. This could be a rising wedge after a breakdown. If there is a rising wedge after a breakdown, then we can expect a further weakness. At the very least, I'm expecting a retest of this low from beginning of May, and possibly even March low, and possibly all-time lows as well. It's difficult to say how much lower it will go from here. Excuse me. So our market timing signal there was actually several market timing signals because it was very choppy in this range, but the latest one seems to be working out pretty well, and it was on May 21st. Next is gold miners. So gold miners ETF pretty much follows what gold is doing as well, and I mentioned this large decline right here. Large decline right here, and then a rising wedge, and I think we got a wedge break right there. So I mentioned last week that a close below 50-day moving average, and especially this low from beginning of May, this is not a good sign. And indeed, we did get a close below this low right here on Tuesday. We since rebounded, but you can see that the 50-day moving average is now acting as a resistance, and then there is also this gap. So my best guess at this point is that we might get a little bit more on the upside and then another plunge down. And we do have an inverse ETF position open for GDX. We have a position open in DUST, DUST. As far as market breadth, I mentioned this in the past. You can see that the index itself was making higher lows, while the market breadth indicators were making lower lows. So they were trending in opposite directions, and that's usually not a good sign. And then the same thing is for bullish percent index. You can see it started to drop, in beginning of May, and looks like we did get a breakdown right here. You can see it. Same thing goes for new highs, new lows indicator. You can see it's pretty strong selling already. In other words, there was much more new lows registered than new highs registered in May. Okay, and then next chart shows market timing. Once again, similar picture as gold itself. There was three signals in the past few months, but only the last one I think is working out right now. All right, next I want to show this chart of oil. It's kind of difficult to see. I want to move it over a little bit. So this is a actual chart of oil because it's a continuous, oil is being traded continuously 24 hours a day. So sometimes it's better to look at the actual chart of oil as being traded, continuous oil contract. So this we got our first indication that something's, there is a top-in action in oil as far back as beginning of May, and then this candle right here on the 19th definitely was a bearish candle. I think our short signal happened sometime here. We went ahead and opened a short position. But what I'm trying to say is this is sometimes it's better to look at the actual continuous price, especially of the commodity itself, than the ETF, like USO, for example, because USO gaps constantly because it only is traded like 6 hours a day during the New York Stock Exchange open hours. In any case, I think the oil is in a general long-term downtrend. You can see this is a green line, is a 200-day moving average, and this is a 50-day moving average. You know, it was a very substantial rebound here, but I think the longer-term pattern is still a downtrend. So for me, it makes more sense to short downtrends, to short rallies in a downtrend than to try and find the bottom. You know, if you did buy right here and you thought, oh great, you know, it's a very nice buy, but it's very difficult to find the bottom in a downtrend. So a couple of ETFs I wanted to show is for Russia. Just move it back over. So Russia is pretty heavily dependent on oil price itself. You can see there was a really nasty collapse right here, and this is kind of like a combination of really falling ruble together with falling oil prices, together with sanctions against Russia because of Ukraine conflict. So very, very really strong and steep decline to $11.99. You can see it rebounded, it almost doubled from the low. Again, this is a long-term bearish security. Some of the other charts I use to determine the trend clearly point that this is a bearish security, but one of the easiest way, once again, is to look at the 50-day, and you can see it's below the 200-day moving average. So within this bigger downtrend for Russia ETF RSX, for me there was 3 good short setups over the past 9 months. I'm guessing this is this is 9 months chart. So this is the first short setup right there. Actually, it definitely worked out. This is a nice decline right there. This one did not really work out as the prices rebounded higher. And then finally this drop right there, which happened in mid-May, just a few weeks ago. So this one is definitely working already, and you can see that today's action was not bullish at all. It was quite bearish. You can see it closed below the 50-day moving average, this red line, and below this green line, which is a 200-day moving average. So now there is a close below both of these moving averages, and my best guess, we may see like a short-term rebound and then possibly a plunge lower, provided also that the oil prices continue lower. Interestingly enough, look at this. Today's chart of Russia, very bearish candle today, minus 1.7%. Oil rallied, let me see, let me go back, like, I think it was, it doesn't show here, but in any case, I think it was about 3.5% or something like this. So it's like a divergence, and this is a very heavily oil-dependent country, and it plunged quite a bit. In any case, I think that Russia is probably headed lower, at the very least to this level of $18 from this tops here. Next, I wanted to show Brazil, EWZ, Brazil iShares ETF. It's actually a very similar picture, and I think it's even more weak than Russia itself, because you can see that on Russian ETF, you can see the 50-day moving average actually crossed above the 200-day moving average right there. So it's like a golden cross, they call it. But they don't always work out. While EWZ, Brazil, you can see it's still not even close. You can see the 50 days way below the 200 days. So definitely a bearish security, and there was a bunch of shorting opportunities. One of this is the latest one, is right here in the late April. You can see that it started to top out with a candle right here, and then a plunge down, a gap down right there. And per our trading system, next chart will show the actual short signal as far back as April 29th. This is the short signal right there. So definitely a bearish security and another leg down possibly. We may retest these lows and possibly go even lower. You know, it's really interesting. You can see that MACD, it's already in negative territory, but it's just oversold and just continues, you know, to stay oversold. It just keeps going. Like you can see here, it was negative and MACD was negative and it continues to push lower. This is a sign of weakness, and you know, again, once again, difficult to pick the bottoms, but you know, it's possible we'll break these lows as well. Okay, just wanted to show you how to find us on the web. Please go to MasterChartsTrading.com. We have a blog there. We're very close, hopefully soon. We're going to start trade alert services. So please do sign up for our mailing list right there, and you'll be first ones to receive a special offer. Also, if you have any of the social media, you can see, if you have social media accounts, you can see most of the charts that are mentioned in this video on this public charts page. You can click there. And again, sign up for our mailing list. If you have Twitter, Facebook, YouTube, or StockTwits accounts, you can follow us there as well. That's it for this week's recap. Thanks for watching and have another great trading week. Bye-bye.